Every major corporation at some point faces disaster. Bad strategic decisions, an economic downturn, or regulatory upheaval can bring even the mightiest to their knees. But there's one company that's different, a company that seems almost immune to failure: Blackstone. While everyone thought the world was falling apart in 2020, they were quietly doubling their assets, adding a staggering $500 billion under management. How do they do it? And more importantly, is it even possible for anyone else to replicate their success? What makes Blackstone untouchable? Stay tuned as we dive into the fascinating story behind Blackstone's rise, uncovering both the bright and the shadowy sides. From their brilliant strategic moves to their controversial partnerships, we're about to reveal the secrets of Blackstone's unstoppable growth and whether you could ever hope to replicate it in your own business. In 1985, two Wall Street veterans, Stephen Schwarzman and Peter Peterson, founded Blackstone. At the time, they weren't building a multi-billion-dollar empire, but a simple mergers and acquisitions advisory shop. No one could have predicted that this small advisory firm would become one of the world's largest and most powerful asset managers, reshaping industries and weathering crises that left many competitors struggling to survive. Their early years were focused on M&A advisory work, but they quickly saw bigger opportunities in private equity. It was Peterson, with his strong ties to political and business elites, who provided the connections, while Schwarzman brought the hunger and ambition to grow the business aggressively. By the late 1980s, Blackstone began raising capital for private equity investments, marking a turning point. Unlike traditional firms focused on public markets, Blackstone ventured into alternative assets, a move that would set them apart from competitors for decades to come. Here are some of the key milestones that defined Blackstone's rise. 1985. Blackstone is founded as a small advisory firm. 1991. The company launches its first private equity fund, marking its entrance into high-stakes buyouts. 1999. Blackstone expands into real estate, a sector that would become one of its most profitable divisions. 2007. Blackstone acquires equity office properties for $39 billion, the largest private equity real estate deal in history, cementing their dominance in the sector. Later that year, the firm goes public on the New York Stock Exchange, raising $4 billion in one of the largest IPOs at the time. 2012. Blackstone makes a pivotal investment in Merlin Entertainments, showing its appetite for consumer and leisure sectors. 2014, they launched the Blackstone Real Estate Income Trust, BRIGHT, allowing everyday investors to participate in their massive real estate operations. 2021, Blackstone acquires QTS Realty Trust, expanding its footprint in digital infrastructure and data centers, reflecting its adaptability in a tech-driven world. 2022, Blackstone's assets under management crossed the $975 billion mark, making it the largest alternative investment firm globally. But was it just smart strategy, or was there more behind Blackstone's meteoric rise? Let's take a closer look at how they managed to secure unlimited funding when others were scrambling to survive. Blackstone's growth wasn't just the result of good business decisions. It came down to their unparalleled access to capital. But where did all that money come from, especially when other firms were fighting for survival? Blackstone didn't just rely on luck or timing. They built long-term relationships with sovereign wealth funds and pension funds that saw them as a safe haven during economic uncertainty. These investors, managing billions of dollars, are always looking for stable, long-term returns. For example, sovereign wealth funds from countries like Norway, Saudi Arabia, and Singapore trust Blackstone to manage portions of their wealth. These funds provide vast pools of capital, enabling Blackstone to make massive acquisitions, like its purchase of QTS Realty Trust. When other firms struggled to raise cash during crises, Blackstone's deep relationships with these institutions gave them a critical advantage. But imagine this, having governments themselves as your clients. The genius here isn't just managing their wealth, it's creating a system where the government's success is tied to Blackstone's success. When regulations shift, who benefits? When public money is injected into sectors like infrastructure, who's already positioned to win? Blackstone's partnerships with sovereign wealth funds and public pensions are not just about capital, they're about control. It's the ultimate strategy. Another significant contributor to Blackstone's capital reserves is the Blackstone Real Estate Income Trust, BRIGHT. Launched in 2014, BRIGHT allowed retail investors to gain exposure to Blackstone's lucrative real estate portfolio. While most people could never participate in billion-dollar deals, Bright gave them a slice of the pie. By 2023, Bright had grown into a multi-billion-dollar vehicle for capital, helping Blackstone maintain liquidity during the global health crisis, while others were cash-strapped. By deploying billions into their single-family residential portfolio, Blackstone has undeniably influenced the pricing of residential real estate. When you're pumping billions into a market, prices rise, and that's exactly what's happened. The downside? Many prospective homebuyers have found themselves priced out of the market. Investing in commercial assets is one thing, but when the investments affect something as fundamental as housing, it's no longer just a business decision. It's a question of ethics. Yet with Blackstone's strategic alliances and deep ties to the government, who's really going to hold them accountable? Blackstone also fostered partnerships with wealthy families and private equity co-investors, giving them the ability to make deals others could only dream of. These families bring not just money, but influence. Whether through their political ties, business networks, or control over industries, these alliances give Blackstone an added layer of power. If, for any reason, the government were to turn against their interests, these wealthy allies could exert pressure in their favor. In a world where business is cutthroat and trust is rare, Blackstone's alliances with governments and the world's elite are as close as you can get to an insurance policy. Their access to capital seems endless, but could it be that Blackstone's power comes from more than just smart deals? Could there be something else driving their success, something a bit more obscure? Blackstone's influence doesn't stop at financial markets. It extends deep into the corridors of political power. While many companies face regulatory scrutiny, Blackstone seems to have a unique ability to navigate and even benefit from government policies. At the helm of Blackstone is Stephen Schwarzman, a man with considerable political clout. Schwarzman served as an advisor to multiple U.S. administrations, including as the chair of Donald Trump's Strategic and Policy Forum. His close ties to key political figures have opened doors for Blackstone, ensuring that when potential regulatory changes arise, they are well prepared, if not outright influential, in shaping those changes. But it's not just about political friendships. Blackstone has made itself indispensable to governments. By managing public pension funds for states and municipalities and investing in infrastructure through public-private partnerships, Blackstone secures long-term stable revenue streams backed by government contracts. During the 2020 health crisis, Blackstone's portfolio companies, especially in real estate and infrastructure, were classified as essential services, continuing operations while others had to shut down. These government-backed contracts provided a cushion that their competitors lacked. Furthermore, Blackstone benefited from Federal Reserve global health crisis relief measures. Ultra-low interest rates and bond-buying programs ensured liquidity in financial markets, allowing Blackstone to raise billions in cheap debt to finance acquisitions, while others struggled to stay afloat. Political ties and powerful connections help, but there's more to Blackstone's success than meets the eye. Let's explore some of the more controversial and lesser-known elements that have shaped their rise. While Blackstone's success is undeniable, not everything about the firm is as clean as it appears. Their power comes with its fair share of controversy. Critics argue that Blackstone's relentless focus on growth leads to ethical compromises. When Blackstone buys companies, it's not uncommon to see mass layoffs as they slash costs to boost profits. Entire communities have been affected, particularly in real estate, where Blackstone has been accused of rent hikes and gentrification that displaced lower-income tenants. Blackstone's investment portfolio has also been the subject of scrutiny. They've invested in industries that raise ethical concerns, including private prisons, fossil fuels, and companies involved in politically sensitive areas. While these investments have been profitable, they've drawn the ire of activists and have raised serious questions about the firm's ethical boundaries. In 2014, Blackstone paid $39 million to settle a case with the SEC for failing to disclose benefits from legal fee discounts. The settlement revealed a lack of transparency in how Blackstone handled investor funds. This raises the question, if this was happening behind closed doors, what else might be going on in the shadows of this global giant? Despite these controversies, one thing remains undeniable. Blackstone is a behemoth. But how much of their success can be attributed to the vision of one man, Stephen Schwarzman? At the heart of Blackstone's meteoric rise is Stephen Schwarzman, a man often described as both a visionary and an opportunist. His leadership has been characterized by a relentless pursuit of growth, an ability to spot opportunities before others, and a contrarian mindset that many credit for Blackstone's success. Schwarzman's ability to stay ahead of the curve has been pivotal. The 1990s shift toward alternative assets like real estate and private equity laid the foundation for Blackstone's resilience through multiple economic storms. More recently, he led Blackstone's pivot to digital infrastructure, acquiring QTS Realty Trust and tapping into the booming demand for cloud computing and data storage. Love him or hate him, Schwarzman's legacy is undeniable. He transformed Blackstone from a small advisory firm into the largest alternative investment company in the world, with nearly $1 trillion in assets under management. His contrarian mindset, bold decisions, and ability to cultivate powerful relationships have all contributed to Blackstone's rise. But here's the question: is Schwarzman's success replicable? Or is Blackstone's ascent a product of unique circumstances, connections, and timing that no other company could hope to reproduce? So, can you replicate Blackstone's formula for success in your own business? Let's break down the key takeaways from their journey that you can apply today. While not every business has access to the same resources or networks as Blackstone, there are key lessons to be learned from their strategy. Whether you're running a small business or scaling up an enterprise, these takeaways can help you navigate challenges and seize opportunities. Diversification is king. One of Blackstone's most important strategies has been diversification. By spreading its investments across different asset classes, private equity, real estate, infrastructure, and credit, Blackstone reduced its exposure to downturns in any single sector. The lesson: don't put all your eggs in one basket. Diversify your revenue streams, whether through new products, markets, or partnerships. Strategic partnerships matter. Blackstone's close relationships with institutional investors, sovereign wealth funds, and governments have been pivotal in its rise. These partnerships not only provide capital, but also access to exclusive deals. In your business, building strategic partnerships with key players in your industry can open doors, secure funding, and provide valuable opportunities for growth. Be bold when others retreat. One defining trait of Blackstone's strategy is its contrarian approach, making bold moves when others are afraid to take risks. During crises, when most companies are cutting back, Blackstone invests in distressed assets and seizes opportunities. The takeaway here: when the competition retreats, it might be your moment to act. Calculated risks can yield high rewards. The importance of political and regulatory navigation. Blackstone's ability to navigate political and regulatory landscapes played a major role in its success. Building relationships with policymakers, understanding regulatory frameworks, and staying ahead of changes have allowed Blackstone to avoid pitfalls. As a business owner, staying informed and forming alliances with influential stakeholders is critical to mitigating risks and capitalizing on potential advantages. Blackstone's journey is both inspiring and unsettling. It's a tale of staggering success, built on strategies that most of us could only dream of replicating. But it's also a reminder that with great power comes even greater responsibility. Can you build a business that thrives in crisis without resorting to controversial tactics? Can you grow without leaving a trail of disruption behind? Blackstone offers a blueprint for success, but it's up to you to decide which lessons to take.